Hey everybody, welcome back to Swing Trading. My name is Mike Fairboard. Good to have you here with us all today. Folks, I just want to take a look at some of the bullish bounces and bear flags today that we're looking at. Wanted to also talk about really the rally we're seeing within the market itself, possibly some optimism growing around the end to the Iran war. We'll see how that unfolds, but I wanted to look at both sides at kind of this tentative rally point that we may be in within the markets right now. And I wanted to tap in to some of the turtle trader indications that we've looked at in the past, showing more extreme weakness or strength. So we'll dive on into that as we look at that around swing trading. Would like to welcome everybody on board. We got Abdul, Jay Richardson, Sharon, Michael, Zink. We've got Wiley and many others. Welcome to all of you folks. We're also joined in the chat by a good friend, colleague of mine, 30-year veteran in the markets, Mr. Ben Watson. And yep, any questions, comments you have, throw those in the chat so we can address those for you. But today, did want to take a look at some of the turtle trader indications around swing trading, bullish and bearish. So with that, let's dive on into some disclosures to get going. All right, this material is intended for general information purposes only. Now, options carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option has a higher risk of being assigned early. Now, a short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Schwab, the paper money software application for education purposes only as well. Investing involves risk, including the loss of principal, and for some products and strategies, loss of more than your initial investment. Now, there is no guarantee that execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. Dividends are not guaranteed either. Quick look at our futures here. We just wanted to note that we do take a look at futures. In fact, we'll look at gold and oil here too, but we just look at the charts and just wanted to state futures and futures options trading does involve substantial risk. It is not suitable for all investors. And with that, let's go ahead and get on sharing here. In fact, I'll go ahead and pull this up real quick. Oh, let's see, just one second. There we go. Perfect. All right, so here we go. Let's look at our markets here, folks. I've got a couple of different things to check out. As we are focused in on the possibility of a bounce in the market, looking at the S&P 500 index, that's a pretty big rally. In fact, folks, it's been continuing pretty much throughout the entire day. SPX, let's just go ahead and take a look at the 30-minute chart. You can see over here that we have extended a little bit higher, kind of a little bit of a zigzag formation, and sometimes, not every time, but sometimes we will get a little bit of a bounce coming off there that forms that zigzag, and you just kind of wonder, hey, are we going to continue up or not? This again is the 30-minute chart. I've been keeping eyes on this around optimism, today of potential for the Iran war kind of slowing down. I know they are letting, or at least I've been reading, they've been letting boats, or I should say boats, ships of oil through the Hormuz Straits, and that would be that's U.S. oil, I believe, or just U.S. freighters, or whatever the case might be. They're starting to open that up a little bit, but we'll see how that unfolds. We are coming up to an interesting resistance level here around 65. We don't know. I mean, we did stop here. You got to say that we did stop at this point a little bit. We've been sort of struggling there a little bit. We don't know if we'll continue up or not, but it will be interesting to kind of see what we've got going on with the markets as we just kind of step back and look and see what we're going to get. Now, the one thing I have been mentioning, that inverted cup and handle pattern right here, which really does, kind of put a range right about here. If I'm just drawing this real quickly and just eyeballing it, folks, it does come up to just above 6,000 in terms of a target. Now, we don't know if we'll get that. One of the things I was talking about yesterday in the ETF class, Rachel's ETF class, is that, if you're rounding over, was that a flag? I did mention specifically in that class yesterday, we could see another flag up to where? Well, right towards resistance. Now, we could break above it, but I'm just saying, like, for example, right here is that range, right there. Yeah, let me get that straight. There you go. So that was the level that we could see. In fact, if I just invert these, right? Let's just invert it real quick again so you can just kind of see as we're mapping this out for strength or weakness. Okay, I did lose my drawings. That's okay. But I was just saying, if you're seeing a cup and handle, where might there be resistance? I flipped it upside down with a minus sign. So we could say support. I'm going to use, actually, I'm not going to trust myself on this. This is just too important. Let's just go with a vertical line instead of me drawing it. There we go. So let's go like this right there. That was that hot. There, a couple of touch points right there. You can see where we're at. Sometimes that will be your handle when you break above the range and then consolidate and then maybe bounce, which, by the way, when you're bouncing is what? This is all minus territory. Sorry about that. It's minus. So it's an inverted flag, but we don't know. We might. And by the way, if the news does show that things are improving out there, then yeah, I wouldn't be shocked at all if we did break above and extend a little bit higher. Okay. Oh yes. By the way, yeah, you can follow Ben and I on X, Ben Watson CS, Mike Fairboard CS. Thanks, Ben, for that reminder. Okay. Good afternoon to you, Will, and Riceberg Kelly, and Scott, others just joining us here, all of you. But just keep that in mind. We don't know. We do know that we broke through a core support level. So I did want to take a look at some of the bear trading as well as we dive on into this. So just a quick note, as we look at this, we can look for strength out there. And if we are looking for, let's say, for example, the bullish type setups where we're seeing some strength out there. Now, although the NASDAQ has been falling pretty heavily, right? And you can see that there and where the resistance level might be on the NASDAQ. We do have companies like Apple, which we do not have a position on that we've been looking at here, that have really been holding up pretty well relative to the NDX. As a matter of fact, we're really at the same level we've been towards the first part of March. And you can see the bounce right there. Now, as you look, as we draw a line, just we shade this area, really focus in on this. You can see here that right now we could be in the making of a hold. It maybe looks like we could get it, breaking above this interesting 250 level. Okay, so we'll see if we get that around support. Now, the one thing you have to say is well, where on earth is the swing trade, Mike? I mean, where could it be? Well, you see this up here? So that's kind of like up at 280, and then you got something right down through here in this range. That would be considered kind of the range it could run, and you'll notice that it's running kind of a swing trade time frame within here. We're holding up, and one of the things that you can see, not every time, of course, believe me, not every time, but if the companies that were kind of like sideways when the market was down, if the market starts to bounce, these can be even more positive. What do we have right now? Case in point, Apple is up 2.8%, close to 3. NDX is up, well, NDX is actually up 3. SPX, so it's SPX about 2.5. But yeah, it's been holding. It's not like in a bear flag or a inverted cup and handle is Apple. So just watching it, we're just sitting here kind of considering a couple of different things. The VIX is still at high levels. It is still elevated. So we could do a couple of different things, which I want to do. Now, we did dip quite a bit on the market breakout. We are above 25. And so a lot of that implied volatility is still in the market. A couple of different angles. What if, here's one angle. First of all, of course, long stock with the measured move. The measured move about to 280. Within this range, I don't want to say necessarily measured move. It's the range that we're in off the bottoms right here, touch. Slightly above that over here, a couple more touches to 280. Will we get a bounce like that? That remains to be seen. Some traders do like to get the hold unfolding, right? They want to see it in place. They want to see it close above the high to low day. I just have to say on a stock like this too, we've had a few of these bounces right here. Look right there with me. If I really just zoom in there, look at this. Touch, 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 touch. I'm just going to still call this clearly resistance at this point. I mean, just historical resistance. It's short term, but it's there. 30-minute will fill in the blanks for us, and you can kind of see right there. So really maybe getting above this high range, or at least above here. We're very, very close to it, but we're kind of consolidating. Now, we could look, let's do this first. Let's look at, let's say for example, a short put vertical. Let's look at selling, I'll back that out again, selling a couple of puts initially and still trying to tap into maybe a little bit of that sideways range, even when the market was weak, with that higher implied volatility still in the form of the VIX. In fact, I think Apple, if we're looking over here at Apple, we are at, what? Let's see, we're at Apple here, 20, that's 25. These are 27 to 30-ish range, right in that range, okay? So that would be an area we could kind of take a look at for the bullish side. Okay, so if we do that right now, what I wanted to do was take a look at the going out. We're generally looking at between 20 and 40 days on that, 20 to 50 days. There's our May right there, the 45. Now using this delta, and again, the delta just represents a $1 move. $1 move on the underlying stock would move the price of the option range really by the amount of the delta. Okay, that's the delta, but it's also an expectation too that traders can look at. So you're looking at about a 28 if you go out that far. But watch this. If I just go out to the April contract here, yeah, let's just see what we still have there. So if I want to do a 5 wide on it, I'm going to click here and I go down here. What am I getting off the 5 wide? I'm only getting 62 cents. 62 cents on that range. And so in other words, I'm selling the 240. Notice something about the 240. We're clearly below this range, this range, this range. All of these lows where they do connect, we are below that level. We're just looking to sell through the month of April, which by the way is ahead of, it would not be impacted by earnings over here. Let's just do a quick comparison on the return on risk that we could be getting on each of these, and we can kind of just decide, all right, as we go through and look at this. But so all else equal, a trader might be looking for prices to hold above that 240 shorter term versus longer term. And then we want to really kind of manage where our exits might be as we look at a potential stop level. Again, a stop level doesn't guarantee an exit, a close at that or near that price, but we'll take a look at that here. Let's go to 240 first. So we have it up. Just click on it again. There we go. Okay, so there's our 240, 62 cents. It was about 70 cents a little bit earlier when I was looking at it. But that is going to be our, let's see, pull up the calculator. Those are our numbers right there. So not really too high. 62 divided by about 438, which is the max loss for this. Okay, so we're getting probably about, it's still about 14%. Now you have to say 14% on that max loss on the risk, total risk in terms of, that defined loss. But that is over 17 days. Now, I think we'll probably do better going out, but we'll have more time, and it would really just depend on the way your convictions on Apple. Doing the exact same levels below those resistance points, 240 to 235, right there. I'm doing 5 wives. You get a $1.10. And what is this looking like in terms of return on risk? Okay, so much, much better if we're willing to hold it. In fact, because that credit's higher, well, we're actually getting the max loss being lower as well, right? Excuse me. Yeah, the max loss is lower. 110 divided by 390. You're just holding it for a little bit longer. So we go from 11% return on risk, ROR, to 28%. And I think many traders might be more geared to that. I'll go ahead and just do this one. You're just going to have to decide on this. It's not to say that you can't try to exit early as well, but I want to put in place a potential exit in case it does go against us, because it is a tech stock and tech has been volatile. So let's consider this. Let's look at this one for now. I am going to go down here. We're going to go ahead and just do, let's go ahead and go to a first trigger sequence. That's fine. Right click, create opposite order. And what we'll do, make sure we go GTC first. Just do a single contract on this. I was thinking maybe about doing a couple of contracts for the April, but this one, it's a better ROR. And what we could be looking at here too is in terms of the risk itself, okay? So here we are. So we're at 110. We times that by 2. We're going to get 220. So in other words, we're willing to try to close this out if we can at 220 if it does go against us, okay? I've got to turn that to a stop right there. It's not a limit. But the 210, in other words, let's say some traders are successful on these trades, 70, I'm just throwing out any numbers, whatever they come up with, 70, 75% of the time, they're successful on their short put verticals, whatever the case might be. They might say, hey, when I do lose, though, I want to just lose what I am willing to risk, which is that 110 right there. That's all they're willing to. They just want to risk that. They don't want to risk any more or get at least close to it. So there you go. There's your 220 right there. And what I'm going to do is I'm just going to come down here, make sure we put it to a stop. And we're just trying to limit that in case it goes against us because we want to consider the environment we're in. Remember, on that NASDAQ, boom, we're breaking lower. We did break lower. Could it be a bear flag unfolding? What the case could, what kind of a situation could there be? We want to have something in place so that it doesn't go against us. In other words, it's kind of like a 1-to-1, right? I can see the levels, the prices are flipping, changing here. I'd probably want to knock this up a little bit to about 230, but I'll tell you what, we're just going to leave it where it's at right now. And okay, fine, I'll flip it. I was going to leave it, but we'll just make it even. So there's, you know, we stand to gain $1.15 and we stand to lose $1.15 as well, which means we close it out at 230, which means if we can get that number, we're just risking what we stand to gain. 1 for 1 when we lose, just so that doesn't ramp up higher. Okay, so confirm. Everything look okay? Yeah, everything's lined up. Good till cancel. I'm going to click it so I could try to get a feel here. Okay, I talked too long. But you guys catch the drift here. And by the way, there is still an expectation over that time frame that we're only going to, I mean, we're still using 29% as it stands right now. This number does vary, but they might say, hey, I believe there's a 29% expectation that we won't go below that level just using this alone. That doesn't consider those support levels or anything. Okay, so some would say, hey, maybe the odds are a little bit better than they stand to be. We're just choosing one that's had a tendency to hold up, but we want to provide that somewhat protection. Well, it's not a protection. It's really not. It's not a guaranteed protection, but it's a little bit of a an indication, a buffer in case it does go south. Because I mean, look at the NASDAQ. We got to be honest. I mean, that's been weak, and it did break this level. So we want to keep eyes on it. It's a good recovery back, and we shall see. But is it a flag or not? Okay, so that's why we did that. We want to have that in place. All right, where am I? Okay, there we are. Let's go back here and take a look at this. So this is just a play on a sideways to upward move, because again, with these short put verticals, folks, we can go up, we can go sideways as much as we want, we can go down a little bit too. And that little bit would have to be going through some resistance. We do have to carry it, though, through a earnings announcement, if you're okay with that. If not, on this practice example trade, that's all we're doing here. Right over here, we do have that April contract. Okay. And just for the heck of it, I'm going to go ahead and do that right now. And by the way, I might need to just go back in here and potentially adjust this so we get that trade. I'll just let it sit. Okay, you guys get the point, though. But I'd like to put the trade on anyhow. Okay. I am going to do this just so I can keep tabs on both. I'm going to do a 240 here and a 235 as well with it. We're going to sell the 240, that is, and buy the 235. I'm just holding the control button down on the keyboard to highlight that. It's at 63 cents right now. I am going to do a first trigger sequence here. Let's go ahead and right click, create opposite order. This way we can keep tabs on both of these. So we're looking at about a 1.2. Okay, it keeps flipping on me. 4, I'll just call it a 2.4. I locked it down. 1.24. In terms of what we're willing to risk, 1 on each side. Good till cancel, make that a stop order. And we'll get this one under our belt here. Everything else looks okay. Again, this is probably very close to about 11% ROR, return on risk, but it's 17 days. Okay, now I'm waiting for both. There it goes. So there's the one. We'll see if we get the other one as well. We're still bouncing in a range, so we'll see what we get. Now, on the other side, I did want to take a look and just say, hey, why don't we look at this also on a stock trade too? But a couple different wrinkles here because of the potential for a downside move if we don't break out. And that's this. We're looking for the hold today. We won't get that until the end of the day, but we're going to set our stop up below today's low. We're going to keep it kind of tight with a target up here around 280. Now, I'm only going to use 25 shares on this, but this is a long stock trade. Let's do this. Right click under the ask price, buy custom OCO bracket. I'll set this up a little bit higher. It was close to actually 280 for the target upside. Let's see, GTCs on these. And I'll set this about 278 and I'll adjust it off of the chart. Now let's go over here. Let's lock this down to a 0.25 or just 225 shares. You know what? I'll even go a little lower. It's a high price stock. Just example trades here, but yeah, notice everything else lights up through there. Great. Okay. Take a look at the order dialog box. Good with that. Send it on through. And that trade, it looks like we got, what happened? Uh-oh. Did the whole trade just go through? Did I not? What did I do? Just a second, folks. Bought 20 and sold 20. Great. Okay. That's not what I wanted. Let's do that again. Right click, OCO bracket order. Okay, one cancels the other. Day order. I might have gotten one of these numbers off. I apologize. That's the beautiful thing, right? With paper money, I can just go through here and go ahead and set it back up again as we practice it. Okay, this is about 280. I'm sure I had a number wrong is what I did, guys. I'm sure of it. Yeah, it was. Obviously, it was higher than that. My apologies, because we were looking at 250. Somehow I had something off there. Okay, so looking at it again, that looks all set. It's above, that's below. Set this up right now. Okay, we'll wait for that trade to fill somewhere in that range. But there we go. So I've got a lot of different lines coming in here. Let's just back this out, go to our auto, and I'll show you the limit order. We've got a couple in here. They just haven't been filling. Here's our target up top. Where are you? There's our target. And then our limit to the downside, again, would be this 20. I'm going to pull it right below that low right there, today's low. In other words, I'm not giving it, it's about right there. I'm not giving it very much flexibility if we're wrong. Here's the thought process. We know the market's been down. Okay, there is one of the trades that just went through. That's the Apple purchase. But the fact of the matter is it has been volatile. And if it is a hold, we expect it to kind of break above here. Let's just say that's the expectation. From whatever trader we're talking about, that may be their expectation. Now, has it broken above that range yet? No. But I still wanted to put one on just so we could have one to look at here. Now, this is moving on. So this is off the bottom. Let's look at one off the top here, ETR. So ETR is interesting. It's in the energy field and it's been lagging a little bit. It's really interesting too because it's had a number of these. It'll break out, kind of consolidate, but the volume on these breakouts haven't been that huge until now. And that's a really, really big move. Now, again, what are we going to see? There are a few things to look at with oil. I was going to look at this earlier. I'll just pull it up right now. There is CL right now. We did get above 100 on oil, and ETR is, I thought it was nat gas. Why isn't that going? I have it linked. ETR. Okay, so right down here, electricity. Okay, so electricity is huge in demand. We'll see if that continues, but with AI, right, there's been a big push there. That's one of a major macro theme, and that was a really, really big breakout here. Now, there are some earnings coming out here, but I believe that was a news-related event. You'll have to take a look at that for sure, but you can see right there, big gap with this level, and we've had a pretty good, strong history of a breakout to the upside. Now, one of the things, too, we've looked at is on this particular move, when we came down here, we had 1, 2, 3 new lows, and then we had a higher low. Okay, that's referred, some traders will look at that as a V, kind of a swing, a V-type bottom swing. It did actually unfold that way, but if we were looking at this as just like a trade itself, where might we see a target at? Well, there is this really kind of larger trade over here. It could be, you'll see it. I'm using the first actual higher low to draw this out, but that could be kind of like a flag pattern here. I mean, a little bit of a pennant before we dip down and really broke up higher. This could, depending upon how we draw this, if we duplicate this, I'll pull it over here and just kind of highlight. We are getting kind of close to that initial range up here. What I was looking at on this particular stock is the possibility of, yeah, I mean, I was thinking perhaps we might get a kind of a consolidation here, but it is an interesting one. Going through all the oil stocks, this is one that's been kind of a laggard. It's been holding back a little bit, relatively speaking, compared to these other stocks that are like this, really high. We've got so many of those, like, for example, Oxy's one. How about Exxon? Exxon, CVX, down the line, pulling back a little bit today. But I don't know about you guys. These are a little bit tricky. You kind of want at least to get a 2-3 day pullback on some of these. But this ETR did have the volume on the breakout, and could be an interesting one. I did look at it in terms of options, and the spreads were just too wide. There's the Aprils. Here's the Mays. A little wide, a little bit wide here. That's 70 cents right at the money if we were looking at it on the other side. But this is one, in terms of the possibility of a breakout and a pullback that could be interesting. All right. So those are some of the, I mean, there are several out there that are bouncing today. There are just a number of bullish type bounces that we're getting out there in the market across the board. I did want to also look at maybe some of the bearish sort of setups too. And I wanted to tap in to an indicator here. I'm going to go ahead and share it with you guys as well. But this is one. It is the turtle bear. The turtle traders had a couple of different setups. Oh, let's just set it up here first so I can show it to you. But what they would look at is just a method that's used. And you can see that this one is actually, these were, well, let's go to some that, yeah, it's an upward trend. But for the bears, you're looking at 20-day new lows or 55-day new lows. Now, this is different from a price channel in a lot of ways. You're actually looking right at the bar coming down. So it is a new low. Those were the two big numbers that the turtle traders would look at. And I'm using this on top of, a more somewhat of a downward trend indication in the general market. And you can see over here, when we get this, we're breaking into lower territory, but the 20 and the 55 is what they would focus in on. If you guys have heard of the turtles. Now, this got both right here at that range, and we did break below. Now, it is bouncing a little bit here, but what we're talking about is really the possibility of a bear flag where prices coming up and hitting off that level. Because once you get this, it's another level that some traders will look at for just a greater expectation. Let me share it with you so you've got it right now. Yeah, let's pull this up right here so you've got it. But this is the turtle trader to the downside. I covered one. I didn't do the downside one in my ThinkScript class, but I'm doing it here. I did the upside one there. You can take a look at that one too. But remember, ThinkScripts aren't guaranteed for timeliness or accuracy, just so you're aware of that. But I'll just say turtle bear right there. Okay. So this is not part of the platform. We had to create the script to find these for you. But you see what it's looking at? It's and by the way, you can see it over here too. A breakdown here, prices dipping, finding resistance. Now I realize it bounced back up a little bit, but these can be interesting breakdowns here. Let's throw out a couple more just to see them. So here's APH, and you'll notice that there's something interesting happening with APH is you are getting, when you spot these, we're only looking at 20-day lows right here, but you're getting this lower low, lower high range. We're breaking below this. So thus far, it's been flagging a little bit. Now I'm going to kind of ramp it up even a little bit more here and just show you what we can spot with this here too. So do you see all those different 20s? 20, 20, 20, and those setups, I think, yeah. What's hard to see is it's lined up, and I've got to get it to kind of position it. You're actually getting the 55 right below it in orange on each one of these two. Oh, there it is. I had to kind of zoom in. Still can't get it. Okay. It's a 55. It's a double, actually. A double hit on both of these here. Now, this is Boston Scientific. But when you have this indicator up, if you see prices come down and you get that signal, I believe that one only is a 20. It's hard to see this. I'll have to adjust this to make sure you can see the 55 below. But you're actually getting it when you get the 20 and the 20, the 20 and the 55. They would look at this as confirmation, and then from there, they would look at the right there bear flag. Okay, bear flag and bear flag, possibly, right? But you see how that helps to spot it? It's one additional indication of weakness for the bear flag. We haven't had to look at bear flags for the longest time because of the fact that the market's been so bullish. I mean, it's been bullish all last year. Well, April, yeah, it was, with the exception of the tariff issue the prior year, we actually had some strength. So you'll find these a lot at the bottoms, but that's what they were looking at. And so this one hasn't quite developed yet, but we're going to do this. I'm going to overlay this with our flag patterns over here, our bearish flags. Sorry, I'm going to have to tap into this because the ThinkScript is a great way to help find some of these. But if I just type in the flag over here, I'll share this with you guys as well. It gives us bullish and bearish, and now we can keep eyes out for the turtle on here too, just to maybe a little bit of extra expectation that some traders might have, perhaps. Okay, so it'll be a minus or a plus. And so this looks for those flag patterns. Now this is on, gosh, let's get it on what we need to look at. It just popped up when I did that. We're looking at the S&P 500 right there. Okay, we can do the S&P 100, 500, whatever the case is. In fact, what we can do is this. Let's do this. I'm going to try the 100 here. I was looking at this earlier, and we're getting plenty of possible bear flags. The way that it's set up right now, this is how long we've been into a flag type pattern. -5 days. So in other words, it's been this. It's already defining that time frame like this. Watch. It's going like this, and then you got 1, 2, 3, 4, 5. Okay? Notice the bear flag? It's a flag right there. It's the flag patterns. Now this one was built by an old colleague of mine, Ken Rose. He built this. Really great guy and very knowledgeable on this too. Let me just share this too. Again, ThinkScripts aren't guaranteed for timeliness or accuracy, but there is your flag scan to combine with the Turtle Trader. And you guys can go through here and take a look. Now, by the way, Ben did just note that there is a survey link in the chat. Folks, if you're getting value out of this discussion, smash that like button. We're going to go through these right now, but yeah, and then also that survey, there's only 2 questions and comments in there as well. But I'm just trying to position you guys so you have some of these tools to look at, maybe as another level of insight that you might gain with this on your charts as well. Now, look at this. I've only got 3 now. So let's look at these right now and just see what we've got on them compared to our turtles. So we've got the flag. What the heck? We had a lot more. Sorry, it narrowed down for a second, I guess, and then it went off. Okay, let's continue on. UNP. All right, UNP, first thing I would say, it could be a bear flag, but look at the upward strength of the trend. Okay, keep on going. There's not a guarantee. Oh, I'm hitting a enter here. Okay, SPG, it did hit a 55 new low. Now, what traders might look at is the possibility here of a flag type pattern at resistance. We're right there, basically just a follow through. Instead of a hold, maybe a blowed, close below the low of the high bar, right? Closing below the low is an indication, kind of like this, that really accelerated. But hopefully you guys are just, getting the idea here. Let's hit Microsoft. Okay, now we're kind of talking here. This is the one we can look at. So see how this 55 jumps down over here, but not over here? We actually have a 55 in here as well. I don't know why we're not getting it, but we're not getting it. So how can I look at that? There's another pink outline of the 55. Excuse me, orange outline of the 55. Now, you see Microsoft coming up here? Tick, tick, tick. Okay, where might we find resistance? Well, maybe at the prior high. Really, really super weak right now. Still going down. Now, do we really assume, and we're looking to maybe just take a negative trade to the downside here? Well, why don't we look at flipping this around and maybe selling some calls on some of these companies, whether you're using turtles or the flags or whatever the case might be. Just be mindful that we could be using this information to help find these a little bit more quicker. Let me go ahead and just share that with you guys so you have it. Okay, let's just do that. Oh, I did. Oh, sorry. You got that one. Okay, you got the flag. Okay, good, good. I see it now. Okay, so very good. Let's do this. Let's go back over here. Let's look at our deltas. I'll push this over to the left. And I wanted to highlight April 17. Now, we are in that 30 range in terms of implied volatility. And what are our deltas showing us? So a lot of times they're looking for the 20 range, or lower. Look at the 355. I want to compare this now with our chart, and we're going to say, I'm on the wrong side. I apologize. I'm looking over here. We're on the calls, and we're looking at this range right there, 380, right there. 380 is that resistance level. Now, obviously, we want to be above that level. 400 is kind of one of those big numbers that maybe it's tricky to get back up above that level. We don't know what we're going to see in the general market, but we can keep an eye on it. Here's 400. That right there has a theta of 12. Excuse me, theta. There's the theta, but the delta is even lower. It's very close, about 11 on the delta. So it's about half of the lowest level. The 390 to 390.250 is really that other range. Let's see 390. Now, is that 390, 392 above this low? It is. It's above this low. So on the call side, are you okay selling this? Or do you want to wait for prices to come up, hit that level, and then possibly come back down? That's a consideration too, just on any stock we're looking at. For now, what I'm going to do is I'm going to go over here and I'm going to say, well, let's just go up a little bit higher here. Show you this. I realize we're going out quite far, but we're doing it in an expectation of the possible bounce. I will do the 395 to the 400. So let's do this. I'm going to click on the bid side, 165, and then we'll go down to the 400 here and click on the ask. Now I'm holding the control button down on the keyboard. It's going to work on your Mac as well. It's also close to the 60 range right there. $60, 60 cents or $60 per 100 shares worth, equivalent. All right. Let's just look at this right now. Now, what are we getting in terms of the ROR? Okay, still tapping into some of that higher implied volatility. Where is it? There it goes. Clicked on it 3 times. There we got it. Okay, 60 divided by 440. There you go. About close to 14, close to about 14% right there. So if we look at 14 percent, I'll go ahead and just put this trade on. We'll do a couple of contracts here. Remember, we are choosing the shorter term time frame. Of course, there could be more out there if we were to go out a little bit longer, but we're putting it into a shorter time frame for sure. So I've just added another contract in. Let's go ahead and go to a first trigger sequence on this. I'm going to right click, create opposite order. We're only going to be risking the amount that we stand to gain. Let me lock that down, and I'll just say that would be $1.20, right? We're stand to lose 60 cents. If we get to $1.20, if this contract reaches that level, then we know we're right at that point. It's kind of a 1-to-1. Again, we don't know if we're going to get it for sure, but we're getting close to it perhaps. It's a liquid, Microsoft, obviously fairly liquid, 28 million shares traded today. Okay, but I've got this all set up in place here. Okay, let's go ahead and flip this into a stop, though. Very important. If it's not a stop, you're going to get filled immediately. Okay, so that's on the call side. So it's a possible bear flag in the making, looking at the short call vertical. Now, these, we could be doing several of these within the market too. Perhaps. I mean, if it's trending down, there might be a number of them that are bouncing up into a potential flag pattern, is what I'm getting at there. I mean, there is that possibility. You could look at some, paper trades across the board there. Let's go ahead and send it in, and there we go. So again, let's just pull it back. We utilize some of this information. Let me just take this off for now so you can see it right there. Okay, there's that bounce just to the other end. But it is one that's coming up as a flag in the scan, and you can see where that would be the case. It's downtrending. The trend is down. It's been showing weakness, but also 55 and 20 day new lows as well. Okay. All right, everybody. Well, that is what I had in mind for you today to look at. Really looking at bullish bounces and potential bear flags with the market coming down. But in both cases, we did keep it kind of tight. We wanted to make sure that if it did go against us, we weren't going to be risking too much potentially with those stop orders. Okay. Yeah, the turtle. There you go. There is a little bit of that too. Yep, it is a little bit underwater. Folks, again, if you did get a chance to fill out the survey, appreciate it. It's just right down there. Ben has noted that, and you can see it. In addition, yeah, if you got value to today's discussion, smash that like button, and let me know in the YouTube comments if there are any follow-up questions. I'm happy to help address those for you, folks. And by the way, if you're seeing this on the recorded version, I will have those scripts down posted below for you too, to tap into. The turtle trader, bearish turtle trader. So you're getting some indication of that weakness to the downside, as well as the flag pattern too. And that's good for bullish and bearish flags. Just a quick note right over here, super quick. You see this on the flags? If you go to the bottom, you're going to see all those flags. Oh, all those flags that are bullish too. It does give you that on the other side. Here's the T, kind of a bullish flag there, and then AMD as well. Not much, but it does call that a bull flag. All right, everybody. On that note, have a great rest of the day, and see you next time.